Hello and welcome to another video from Creativo Solutions. In this video you'll be watching the first assignment of the British International Distance College. We offer private support classes for students and we're going to be covering the accounting module in this video. For more information about our private tutoring offering, please visit our website for more content and resources to help you. And you can contact us if you have any questions. Please consider following us on Instagram and Twitter, and keep watching our YouTube channel for more support. Consider subscribing so you'll be the first to find out when new videos are uploaded. Just a third-party disclaimer here. The material in this video is based on information, products or services by third parties. Third-party material comprise of the products and opinions expressed by their owners. As such, I do not assume responsibility or liability for any third-party materials or opinions. I cannot guarantee the accuracy of the information contained in the third-party material. The presentation of such third-party material is simply used as a tool for assisting viewers with answering questions for educational purposes. All trademarks appearing in this guide are the property of their respective owners. In the IGCSE Accounting Assignment Pack, one of the rules states that all resources may be used when answering assignments, including textbooks, the internet, tutors, etc. Creativo Solutions is a private institution and is in no way connected to the British International Distance College. Any reference made to the subject material referred to official BIDC material, and we do not represent them as our own. We simply work through BIDC material with students as a means of additional academic support. We have a few tips here for all of you who are studying accounting at the British International Distance College. I do suggest you pre-read all the chapters in the textbook, make notes, and identify those key concepts. Understanding the theory is important because then we need to practice the actual application when we look at questions. Additional reading is always important, so if you can, try read as much as you can on accounting and then practice applying your knowledge to different questions. The more questions you do, the easier it gets. Consider starting a study or a discussion group, and that can also help you achieve your goals. If you would like to contact us to find out how we can help you, DM us on Instagram or tweet us on Twitter, and leave a comment on our YouTube channel and we'll respond. You can find more detailed information on our website www.creativosolutions.com. So the focus of this video is to take you through assignment 1. Let's begin. So I hope you guys have your assignment packs with you. You would have received the packs from the British International Distance College. I'm looking at page 31 in your actual pack, and we're going to be completing assignment 1 together. Assignment 1 totals 90 marks, and question 1 is focusing on analyzing the above transactions. Question 1 says, Admire Muwalyo set up a business on 1 November 2015 to trade under the name Muwalyo Stores. The following are the transactions for the first month of trading. So we're looking at November 2015, and they've given you transactions from the 1st of the month all the way through to the 29th. Important in terms of exam technique, you would have to always look at the required to identify what is the question actually asking you for. The required here says, enter the above transactions in the ledger of Muwalyo Stores for the month of November 2015. Balance the bank account, cash account, and Helmut account at the end of the month. So there are 3 accounts that you're going to have to balance. We know we're going to have to be interpreting these transactions and recording them in the actual ledger. So I'm going to write a heading here, ledger or general ledger. And obviously the general ledger is going to have many different tier accounts. We know we're going to be balancing 3 of the tier accounts as described by the instructions. So I'm going to draw up our tier accounts. And we'll have T accounts for all the different accounts that we have in the actual transaction. Okay, so let's start off with transaction number 1. On the 1st of November, they indicate that capital of $30,000 was paid into the business's bank account. So we know there's going to be a bank account, and if you've covered the theory, you should know bank is an asset. So the bank would have a balance on the debit side if balances were given in this question. There were no balances in this question, so we're just going to be looking at the effect on bank and the effect on capital. So we know capital is going to be affected because the owner has contributed $30,000 and it was paid into the business's bank account. So the business's bank account is going to go up on this particular date, and it'll be referenced with capital, and they would have gone to the cash receipts journal. The capital was $30,000, and you would then have a credit for capital also on the 1st of the 11th, and capital is increasing because of bank, also from the cash receipts journal. So the accounting rule says every debit must have a credit. So here's my debit for bank, and there's my credit for capital. I've now recorded transaction number 1. Transaction number 2 says purchased premises $20,000 and paid by check. So if I'm purchasing premises, you would classify that as land. So we could have land and buildings as the actual account that I'm going to be recording this transaction in. If I'm looking at the ledger, I know I'm paying by check, so the bank would be affected. If I'm looking at the actual bank account, I'm decreasing bank because I'm buying premises. So on the 2nd of the 11th, land and buildings will be referenced. This would have been recorded in the cash payments journal, and I would have recorded a $20,000 payment. $20,000 will be referenced in the land and buildings, and also on the 2nd I'm going to be referencing the bank. Cash payments journal. So again, there's your credit, here's your debit. Debits and credits are equal. You've recorded this transaction correctly. The next one for the 4th, purchased goods $1,900 and paid by check. So if I'm purchasing goods, I'm going to record this as either inventory or purchases, depending on what inventory management system they're utilizing. They haven't specified the system that's being used, so I'm going to use purchases. Purchases, we would assume, is used in this business, and we would then say that they're using the periodic system. Right, you will learn about the periodic and perpetual systems later. For now, I'm just using the word purchases to describe the inventory that's being bought in this particular company. You could also have called it inventory, and then that would have been representative of a perpetual system. But again, these are different systems that are used in an actual business when managing inventory. So purchases would be seen as an expense, inventory would be seen as an asset. Either or, there's going to be a debit here because I'm buying more and I'm paying by check. So on the 4th of the 11th, bank, cash payments journal, and the amount $1,900. This is going to affect the bank account, so on the same date I'm going to be recording a credit for the purchases / inventory. That would have gone to the cash payments journal, and I would have recorded the credit here and the debit there, and I know I've got it correct because both the debits and credits are equal. Number 7 says we sold goods on credit to E. Helmut. Okay, so if I'm selling goods on credit, we know we'll have trade receivables or a debtor here. E. Helmut would be considered a debtor to the business because they're a customer buying on credit. So am I looking at a credit sale, definitely you should know from your theory that a credit sale would affect the trade receivables. Slash debtors. This is obviously E. Helmut's account. E. Helmut or Muth. Okay. And that would be the asset account that I'm going to be recording, and then I'm going to have an account for sales. So the transaction on the 7th said we sold goods on credit to E. Helmut. Okay, so if I'm looking at selling goods, my sale is going to go up. This is on the 7th. So trade receivables or debtors. E. Helmut. And I'm going to be recording the amount. This would have gone to the debtors journal. And the amount here was 1250. The trade receivables or the debtors E. Helmut account, okay, that's a separate tier account, would also go up. So I would record that there. Why? Because of the sales that have occurred with that debtor. Then we've got on the 15th, we sold goods for cash. So I'm going to create another account for cash, and this was on the 15th of the 11th. My cash is going to be increasing or decreasing? Well, increasing, because this was a sale. So cash would be an asset that is increasing, and that'll be increasing on the debit side. So we sold goods $90 for cash. Sales $90, and my sales will have the 15th of the 11th cash from the cash receipts journal, and I would record $90 there as well. Next, on the 15th, we have another transaction. We paid $5 in cash for the goods to be delivered to the customer. So we're paying $5 in cash. Our cash is going to be affected on the 15th of the 11th, and we're paying for the goods to be delivered to the customer. So this would be a delivery expense. They would have gone to the cash payments journal, and we would have recorded an amount of $5 against cash that would affect the delivery expense account. Okay, so I need to record a delivery expense, $5 coming from the cash. That would be a payment that I'm going to be making when transferring those goods to my customer. Delivery expenses. That's another tier account that you would have to draw up. Then on the 19th says we purchased office stationery, $15, and we paid in cash. So another expense for stationery, and we paid $15 for stationery. So purchase office stationery, $15, and paid in cash. If we're paying in cash, our cash account is going to be affected. This occurred on the 19th of November. So when we draw up our cash account, we're going to show a credit for the 19th for the stationery that we've purchased. And that would have been $15 that would be decreasing the cash account. The last transaction here is on the 29th. E. Helmut sent a check for $700 on account. So they're sending a check. The check would be deposited into the bank account. So E. Helmut was our debtor. So if I go back up to the top here, our debtor is paying us, so we're receiving money. Are our debtors going to owe us more or less? They're going to owe us less, so the debtors account will decrease because of bank increasing. Bank cash receipts journal, the amount received was $700. That's going to be recorded against the bank account. Bank is going to go up on the 29th because of the trade receivables. slash the debtors E Helmut. Okay, and that was $700. So that's all of the transactions that they've asked you to analyze for question number 1, which was the ledger. What did the question ask you to do? Well, they asked you to balance the bank account. So balancing is very straightforward. You just need to remember how to balance an account. I need to look for the bigger of the two sides. I can see the debits are bigger than the credits, so I'm going to add those two amounts, and I'm going to want the same total on both sides. So when balancing the account, I'm going to bring down and carry down a balance. So on the 30th of the 11th, I'll have a balance carried down, and the balance carried down will be the difference between the 30,700 less those two amounts over there. So 8,800 is the balance that I'm going to be carrying down for the next month, which is the 1st of the 12th. Balance brought down. So that's the bank T account. Capital only has one credit, so we don't balance. Land and buildings we can't balance. Purchases we can't balance. They did tell us in the question that we had to balance E Helmut's account, so that would be this account over here. So the same story applies. We would be balancing that account by looking for the bigger side. So if I'm looking at the trade receivables, I know that the debit side is bigger, so I'm adding up, okay, which I only have one amount, so there's no need to add up. And then the difference would be the balance that I'm going to bring down and carry down. So the balance carried down would be 550, which is the difference between the 1250 less the 700, gives you the balance that I'll be carrying down and bringing down for that particular account. The question also asked us to balance the cash account. Sales only had transactions on this side of the account, so we would just add up those amounts, but we're not required to balance that account, so I'm not going to show that. They did ask you to balance the cash account, so again the same story applies. Add and subtract and work out the difference in order to get the actual balance. Right, so in this particular account we know that the debit is bigger. You'd want 90 on both sides of the accounts. You've got 5 and 15 there as a credit, so the difference is 70, which would be carried down and brought down as the balance for the next month. And that is transaction number, or that's question number 1. Sorry, we've recorded all of the transactions. I hope you found that easy. That's the first question in this particular assignment. Let's now continue with question number 2 from assignment number 1. Question number 2 has two parts, part A and part B. Part A is asking you to draw up Joe's bank account for the 6 months ended 30 September 2015. Bring down his closing balance. So again, that's a ledger account. General ledger account, T account for bank. B says, using the information given and your answer to A, prepare a trial balance for Joe as at 30th of September. Show your working, which may be in the form of a ledger account. So we need to draw up a trial balance, which you should know is a list of accounts with debits and credits. Let's see how we would answer this question. Well, the first bit is obviously to draw up a T account for bank. And I need to draw up a trial balance. What does a trial balance look like? Well, a trial balance will have a list of debits and credits. So I'm going to do that on the right. Trial balance as at 30 September 2015. That's the trial balance. A trial balance will have a debit column and a credit column. And then we're going to be recording accounts according to two different sections. So the financial position section and the nominal account section. Okay, so we have two sections in the trial balance. Just to stay in line with the disclosure, we'll be identifying the two different sections in our trial balance as well. So now we need to go look at the actual information in question number 2. Question number 2 says Joe began trading on the 1st of April and paid $10,000 into a business bank account. He borrowed a further $5,000 from his sister Frida and also paid this into the business bank account. A summary of Joe's transaction for the period 1 April to 30 September is given below. So to always start off with the easy marks, we need to record what happened right at the beginning when Joe started trading and he registered a business and he obviously contributed an amount of money into the business's account. So we know from the beginning that on the 1st of April there was an opening balance of $10,000 which was transferred into the business's bank account from Joe as the owner. So the 1st of the 4th, there's a capital contribution, and that would have been recorded in the cash receipts journal. We would show $10,000 over there. If I had to draw up an account for capital, I could draw it up here if I wanted to, which we had previously done in the other question, and then we would be showing 10,000 on that side, reference from the bank. The question didn't specifically ask for these T accounts, so it is not necessary to draw them up. So all I'm going to do is just reference the capital in my statement of financial position. Capital would be part of the financial position account section, and capital would have an amount of 10,000. So notice how I'm recording the credits here in the actual financial position, and I'm recording the debits there for the bank. So capital had 10,000. I can already record the 10,000 in. I doubt they'll adjust those line items. They may or may not. In more complicated questions, you might have to adjust the trial balance for certain transactions that may arise in additional information. In this example, it's relatively simple. All I need to do now is just record the amounts where they need to go. We know that he also borrowed $5,000 from his sister Frida and also paid this into the bank account. So this is a borrowed amount from his sister. If Joe is running a sole proprietorship, Joe would represent the business. So if we're looking at this transaction as being a loan from Joe's sister is not the owner of the business. So this wouldn't be seen as a capital contribution. So we would have a loan here, loan from Frida, and the loan from Frida would be viewed as a liability, so we would be crediting that account with $5,000. The bank account would have gone up, and this occurred when? Right at the beginning of the actual commencement of doing business. Okay, so loan, Frida, that would have been a cash receipts journal entry because it would have affected the bank positively, and Frida gave Joe's business 5,000 Rand as a loan. Then we have a summary of transactions for the period 1st of April to 30th of September, and that's given below. So the first line item says inventory bought on credit. If inventory is bought on credit, we're not going to be affecting the bank, but we are going to record inventory here, and it was bought on credit, so we'll have trade payables or creditors. We're buying from suppliers on credit, and that would be seen as a liability. So the inventory went up by 6,000 and our liability would have gone up by 6,000. Notice I'm showing that in brackets because I may or may not have to adjust these line items. Remember, I don't only buy inventory using credit, I could also buy inventory using cash. So I need to read the rest of the question before I can say for certain that those are the totals that I'm going to reference in the debits and the credit side, okay, of the trial balance. Then we've got sold goods. Cost price 4,000 on credit for 5,500. So if I'm selling goods on credit, I'm going to have debtors or trade receivables and the debtors would have gone up because I've sold on credit 5,500 and I had a sale, so 5,500. So debit for the debtors, credit for the sales. In brackets they mentioned you sold goods with a cost price of 4,000, so I would have to record a cost of sales. In the first 7 chapters of the actual course, they haven't described the perpetual and periodic systems in detail yet with regard to cost of sales in terms of the calculation, but here in this particular assignment they've mentioned a cost of the actual goods that you've sold. So I am going to include it here, a debit for cost of sales, because I've sold, and if I'm selling I would have affected the inventory, which would then be a negative 4,000. Don't worry if you didn't quite understand that. Later on in your textbook they will cover the difference between a periodic and a perpetual system, and you would definitely cover cost of sales there at a later stage. That might be new information for some of you who have only covered the first few chapters in the actual textbook. The next transaction says we paid rent of premises by check. Is this going to affect the bank? Definitely. So when looking at the 30th of September, I don't know when we actually paid this, but they just say this was the transactions for the period. So I'm assuming that that was all of it during that period, from 1st April to 30th of September. How much did I pay for the rent? Well, $1,000. And this was for the rent expense. Cash payments journal. And the rent expense would have decreased my bank by 1,000. Okay, paid the rent by check. I'm then going to have to record the rent expense, and the rent expense would be 1,000. The next transaction says we received cash from trade receivables and paid into the bank. So if I'm looking at bank is going to go up because I'm receiving money from our debtors. So on the 30th of the 9th, our trade receivables will be decreasing and our bank will be increasing because our debtors are paying us. The cash receipts journal is going to be the journal that I will be recording the actual receipt in, and the amount that was received from my trade receivables was 3,600. Trade receivables will be affecting the bank positively. The trade receivables, on the other hand, will be decreasing by 3,600. So notice how I've adjusted for that in the actual trade receivables account. Then we have paid trade payables by check. If I'm paying, that's going to decrease my bank. So my trade payables or my creditors, okay, it's a liability that's decreasing from the cash payments journal, will be affected. How will it be affected? Well, negatively. Liabilities decrease on the debit side and bank decreases on the credit side. So bank would decrease by 4,700. That was the amount that we paid to our trade payables. Here's my trade payables, decreased by 4,700. Then they said we paid general expenses by check. If I'm paying the general expenses by check, I'm going to be affecting the bank. 30th of the 9th, general expenses, and the general expenses would have gone from the cash payments journal, and I paid $2,000, and that will be affecting the bank negatively. General expenses will be a separate account that I need to provide for as a T account. All of these would be separate T accounts. So if you wanted to, you could draw a T account for all of them. The only T account that they asked me to do was this one, bank. And then B said I should draw up the trial balance and show workings. So I am showing workings. I'm showing workings in brackets. The general expenses was an amount of $2,000. Now I need to balance this account off because I've completed the question. So I'm going to be adding up my debits and my credits. If I add up the two sides, I can see the debit side is bigger. So I want the same total on both sides of the account. So I'm going to be carrying down and bringing down a balance. On the 30th of the 9th, balance carried down. The balance that I'm carrying down would be the difference between the 18,600 and all of those credits. So the 1st of the 10th, balance brought down 10,900. Bank will be part of the financial position account section, and bank would then have a balance of 10,900. Did my inventory change? Yes, it did. So I'm going to have to work out the net amount, which is 2,000. Did my trade payables change? Yes, so the net amount will be a credit. Did my trade receivables change? Yes, it did, so the net amount will be a debit. Sales did not change, so I can record that there. Rent expense would have a debit balance. Right, so after having done all of that, I'm then going to total up my debits and my credits to see if the trial balance balances. So let's add up the left and the right hand side of the accounts. Sum up all of that, and I have 21,800 on both sides of the accounts. Right, and your trial balance should balance. If it balances, you know you've gotten 100% for that question. And that was question number 2, guys. Let's now look at question number 3. Question 3 is broken up into several different parts. Part C, Part D, and Part E. Part A says, prepare ledger accounts to record these transactions. Complete the ledger by closing or balancing accounts. So we need to create lots of general ledger accounts. All the T accounts. Make sure you do all of them. Then they say prepare the trial balance. So the next one is the trial balance. C is the income statement. Right, the vocabulary has changed. So I see the material in your assignment pack from the British International Distance College refers to the income statement. According to the International Financial Reporting Standards, the income statement's name has changed to the Statement of Profit and Loss and Other Comprehensive Income. Statement of Profit / Loss and Other Comprehensive Income. But we'll refer to it as an income statement because that's what they've referred to it in your books. And D says complete the capital account by transferring the profit and total drawings for the year. So capital T account, that's something that I need to draw up. And prepare a statement of financial position. So that's the requirements for this particular question. Okay, question 3 is long because they're asking you to draw up all the T accounts and then the trial balance in terms of debits and credits. So I'm going to again need a template. So I'm going to be referring to T accounts again. So I'm just going to take a T account for us to draw up. We're going to draw up columns for the trial balance, delete all of that. Okay, I'm creating my answer sheet. I'm going to delete all of this. Okay, and I'm looking at A, which is the general ledger. So ledger accounts, and B is the trial balance for this particular company. The trial balance is going to be for the month ended 30th of June 2016. We'll have a debit side and we'll have a credit side, and we'll have a nominal account section. So again, stick to the format. So we first need to look at all the ledger accounts, and then we'll transfer all of that to our trial balance. Once we've done the trial balance, then we can focus on disclosure in terms of the income statement as well as capital and the statement of financial position. Right, D will actually be doing when we do up all the tier accounts. Okay, draw up all the tier accounts. So obviously the first tier account that they want us to draw up, if I look at the trial balance, so we know what the required is. That's the required. We need to draw up all of those things. Then I need to go to the information in the question and I need to read it. So they say Aminata is a trader. Her business has been trading for 11 months and its trial balance at the end of this period is as follows. So they've given you a trial balance as at 31st May 2016. Remember, we're looking at transactions for June. So 31st May would be the opening balances for all of these accounts. The first account that I'm going to be drawing up is capital, because that's what they gave me in the trial balance at 31st May. So I'm going to draw up capital. Capital will have debits and credits. I'm going to have a balance, which is an opening balance. We know that capital has a balance of 54,400. 54,400, and this was for the start of June. Balance brought down 54,400. Right, the next tier account that we're going to have to draw up is premises. So they've actually referred to it as premises. I'll keep it as premises. We'll have a balance that will carry down, brought down. Premises will be an asset like land and buildings, and that'll be 40,000. 40,000 for premises. Then we've got fixtures. Fixtures is also an asset, so fixtures would have an opening balance on the debit side of 14,000. Then we've got revenue. Revenue 82,000. Revenue would be a credit opening balance. So revenue balance carried down, brought down. Obviously we're looking at the brought down balance for the new month, 1st of June, 82,000. Then we have, after revenue, we have drawings. Drawings would have a debit balance, and the debit balance for drawings is 1,790. Then we've got purchases. Purchases would have a debit balance, and purchases has a debit balance of 7,100. Trade receivables. Trade receivables will also have a debit balance, and the trade receivables has a debit balance of 4,500. Then we have bank. Bank we know is an asset. Bank therefore will have a debit balance, and the bank balance in this question was 5,170. Then we've got trade payables. Trade payables would be a liability, so that account would have a credit balance. Trade payables, and the trade payables was 8,000. Then we've got insurance. Insurance is an expense, so the insurance would have a debit balance, and insurance has a balance of 5,390. Sundry expenses 1,440. Sundry expenses would also be an expense which would have a debit. Sundry expenses would have a debit. Expenses, and the debit for the sundry expenses was 1440. Then we've got wages, which is another expense which would have a debit balance. And the wages for this was 8,100. Then we've got property tax. Property tax would be another expense. And property tax would therefore have a debit balance, 1430. Finance costs, which is interest on the loan, that would be an expense. Finance costs brackets interest on loan, which we know is an expense. And if it's an expense, that would have a debit balance of 1,100. Then we have long-term loan, ABC Bank or Loans Limited. Okay, so that would be a credit. Long-term loan. ABC, and the long-term loan amounted to 10,000. And then we've got cash, 980. Cash is an asset, so it would have a debit balance. Cash has a balance of 980. So those are all of the opening balances for all of those different accounts. We now need to look at the information they've given us in the question. So your question says, during the month of June, the following transactions took place. And we've got transactions for June. So each and every one of these transactions need to be recorded in their particular tier accounts. Right, so now I'm going to be going through the transactions and recording them. We know A was to record all the ledger accounts. We know D is wanting capital. So capital here is actually for D. D is capital, the tier account for capital. Right, the trial balance we'll look at later. We first need to draw up the tier accounts. That's the hard part. So transaction number 1. 1 June, purchased goods for resale and paid by check. If I'm paying by check, my bank will decrease and my purchases will be affected. So purchases would go up when buying goods. So 3,200 would be debited, and that would be referenced on the 1st of June bank cash payments journal. They said we purchased goods and we paid by check. So there's the debit. In my bank, I'm going to have a credit on the 1st of June for the purchases that I've made. Cash payments journal, 3,200. That's the first transaction. Transaction 2 says sales on credit totaled 6,300. So if I'm selling on credit, I'm going to affect my receivables. This was on the 2nd. Sales from the debtors journal, and that would have affected the sales account as well. 6,300. 6,300 must be recorded in sales. Where's my sales? Where's my sales? There, revenue. Okay, so we didn't have a column for sales, but we had revenue. So I would use revenue here. So instead of sales, let me replace that word with revenue. Revenue slash sales. It's the same thing, just two different words for the same thing. So this debit over here for revenue is going to go to revenue here on the 2nd of the 6th. Trade receivables debtors journal equals that amount that I referenced there, 6,300 in revenue. The next transaction for the 4th says Aminata, which is the owner, withdrew cash for private use. So we know this is drawings. They're withdrawing cash, so cash will be affected negatively. So there's my cash on the 4th of June. Drawings. This is taking from the business in terms of cash. This wouldn't go to cash payments journal because we're looking at the actual cash that's being taken. So I would be referring to a general journal for this particular one, okay, because it's drawings and it's specifically cash. You could maybe view it as cash payments as well, depending on where this company is recording it. So I'm just going to put asterisk, not asterisk, slash journal slash cash payments journal. If we look at cash payments, well then cash could go to that journal. The drawings was an amount of 210, which would affect the drawings. Drawings. Where is drawings? There, 210, and that would have been cash. And this was on the 4th of the 6th. Cash, general journal again, slash cash payments journal, depending on which journal you're going to be using to record this in. Then on the 6th, we have cash sales, total 2. The 7180. Okay, so on the 6th, cash will be affected because this is cash sales. So on the 6th of the 6th, we have sales, or revenue rather. We're using the word revenue here, cash receipts journal, and the revenue here was 7180. Right, so this is going to affect my revenue account positively, which would increase it. So I've got the debit here for the cash. I'm going to have a credit for the revenue. 7180, where's revenue? There's revenue on the 6th of the 6th. Cash sales, cash receipts journal, 7180. Then I've got number 9. Transaction 9 says paid wages in cash. So if I'm paying wages, I need to record the wages. So my wages account is here. This was on the 9th of the 6th. Wages will be debited with cash, cash payments journal, and the wages amounted to 2360. That's the amount of dollars that you're paying in terms of wages. Then I go to my cash and I need to reduce my cash with that amount. So cash is going to decrease with the amount that I had for wages on the 9th of the 6th. Wages, cash payments journal. Then the 12th, received cash 1,430 from a credit customer. So a credit customer would affect the trade receivables. So there's my receivables and I'm receiving cash from them. They said received cash from a credit customer. So the credit customer will decrease. This was on the 12th of the 6th. Cash receipts journal. How much cash did I receive? 1430. Received cash from a credit customer. Then my trade receivables is going to be affecting my cash on the 12th of the 6th. Trade receivables. Cash receipts journal. And the amount that I'm recording here is 1430. So you can see I've got 1,430 there, and I'll have 1,430 there because the trade receivables is being affected. Number 13 says, repaid part of bank loan, 1,000, that's what they said. Funds were transferred from the bank account. So 1,000 is going to be transferred from the bank account to the loan. We're paying off some of the loan. So the bank account will decrease. This was on the 13th. The loan was affected. Cash payments journal. How much did we affect the loan by? It's 1,000. So our loan account is going to decrease. Where was our loan account? There's our long-term loan account. 1,000 would go against this account. 13th of the 6th bank cash payments journal, 1,000 reducing the loan. Then on the 14th, paid property tax in cash, $130. I'm paying property tax. There's my property tax. I'm paying it in cash, so 130 will decrease the cash and we'll record the expense here. Cash payments journal, 130 against cash. So there's the property tax in my cash. I'm going to have on the 14th of the 6th, property tax, cash payments journal, 130. Right, so you can see there's the credit and property tax, there's the debit. Then on the 15th, it says we paid loan interest 110. Funds were transferred from the business's bank account. So our bank account is being affected in this instance. And this was on the 15th of the 6th. This was interest on the loan. Paid loan interest 110. Paid loan interest 110, transferred from the business bank account. So cash payments journal, we're paying interest, there's my credit. So interest is going to have the debit. Where is my interest? The financing cost, which is the interest, 110. This occurred on the 15th of the 6th. Bank cash payments journal, 110. Then on the 18th, the next transaction says we paid for sundry expenses cash. Sundry expenses cash, so cash will be affected by 720. Cash is going to decrease. This was on the 18th of the 6th. Sundry expenses, cash payments journal, and the sundry expenses of 720 will have the debit. Where's my sundry expenses? 720 here. The date was on the 18th of the 6th. Cash payments journal. Then on the 21st, they say sales totaled 4950, all money received and paid into the bank account. So we're selling and bank is being affected positively. Bank would have gone up with 4950 because of the sales that you've generated on that date. Sales, we don't have sales, we have revenue, so I'm going to use that. Cash receipts journal, revenue and sales. Where's my revenue account? There's my revenue account. Right, so debit the bank and credit the revenue, 4950. This was on the 21st of the 6th. Bank cash receipts journal, 4950. All money paid into the bank account, great. Then we have the 23rd. It says Aminata withdrew a check for 660 for her private use. So if she's drawing a check, it's going to affect the bank, and it's for private use, so this is drawings. 23rd of the 6th, drawings cash payments journal. She took an amount of 660 for herself. Drawings will have 660. Where's our drawings? There's our drawings, 660. This occurred on which date? The 23rd of the 6th. Bank cash payments journal, 660 against the drawings. Then on the 26th, they said transferred cash of 4,200 to the bank. So we transferred an amount here. How much did we transfer on the 26th? Well, the 26th of the 6th, we transferred cash to the bank. So bank cash payments journal, or cash receipts journal rather. Okay, because we're receiving money in terms of the bank. The bank is going up. So I'll reference the receipts journal here rather than, it's not a payment, it's a transfer. You're transferring cash. Or you could even use a general journal here as well. Possibly, depending on where you're recording these transactions. How much did I transfer? 4,200. That's the amount that's coming out of the cash. That's the amount that's going to be recorded in the bank. Where's bank? There's bank. 4,200. This is coming on the 26th of the 6th. This is coming from cash. Again, cash receipts journal / general journal, depending on what journal you're using to account for this transaction. Then on the 27th, paid trade payables for 4,700. Right, so 4,700 is the amount that we're paying, and it's paid by check, so bank is being affected. This transaction occurred on the 27th. Cash payments journal. Bank would have decreased 27th of the 6th. Trade payables. We're paying our creditors, okay, our trade payables, the amount that we're owing. 4,700. So there's the credit, there's the debit. We know we've done that correctly. And the last transaction here in this exercise is number 30. They say we paid insurance by check. So I'm going to have to add more lines here. Lots of payments by check. On the 30th of the 6th, we paid insurance by check, cash payments journal. Insurance CPJ, the amount 480. That's the amount that we're paying, 480. 480 is the amount that we're paying, so insurance is going to have 480 there, and they would have come from the bank. Cash payments journal. So now we've completed the question. We've looked at all of the transactions and we've recorded the transactions. The last bit is to balance each and every one of these accounts. So we now need to look at each of these accounts. Capital I can't balance, premises I can't balance, fixtures I can't balance. There aren't debits and credits. Okay, so you would literally just total. It would be that amount that you have there. Revenue I would have to total, so I am going to balance this account. Okay, so I'm going to show on the first day of, or the last day of the month, 31st of the 6th, balance brought down, balance carried down. I'm literally just going to be summing up, adding everything, and that would represent the balance. Okay, so revenue has that balance there. I would do the same for drawings. I would literally just sum up, and that would be the balance that I would bring down and carry down. Alright, so I'm just going to show that here. Carry down, brought down, and that amount. That would be the drawings. Then we've got purchases, which I would have to sum up as well. So I'm going to use this. Okay, add up those amounts, you get that total, balance carry down. Trade receivables, I do have one side bigger than the other side. So how do I balance this account? Well, I need to sum up the debits and then work out the difference here, which is the balance that I would carry down for the next period. Right, so this minus the credit gives me the balance that I'd carry down. Bank, I am going to have to add and subtract here. Right, so let me first add up that side. Gives me that. If I add up this side, gives me that. Okay, so the debit side is bigger. So I'm going to have a balance that I'll carry down, balance brought down. This should be 30th, not 31st, sorry. 30th. Balance carried down. Balance brought down, and that'll be this minus the sum of all of those credits, the difference, and that would be the difference. Okay, so if I add up all of that, 14,320, that's correct, and that'll be the balance that I've carried down. Alright, so be careful with this. It's balance brought down, balance carried down, and you've got the balancing figure for bank. Trade payables, I do need to balance here. This side is the bigger amount. Balance carried down. Balance brought down for that particular transaction. Here I'm just going to total, so I'm literally adding brought down and carried down. It's going to be those amounts there for insurance. Sundry, I'm going to have to do the same thing here for sundry. Balance that account. Add up that amount. I need that figure there. Wages, same story. Add up those two amounts. Get that total. Property tax, same story. Add up those amounts. Get that total. Finance cost the same. Add up those two amounts. Get that. Long-term loan. Going to have to balance this account. Bigger side. Balance carried down. Balance brought down. 9,000. Cash. Very big T account here. I do need to balance. I need to see which side's bigger. So I'm going to sum up all of that. And I'm going to sum up all of this. Which side's bigger? The debit side is bigger. Right, so I'm going to balance this, and I'm going to have a balance carried down here, and I'll have a balance brought down there. This total less the sum of all of my credits. And those are your balances. So now I've balanced all of those accounts. All I need to do now is draw up the trial balance. But before doing the trial balance, what did they say? Okay, number A said prepare the general ledger accounts, complete the ledger by closing or balancing accounts. Okay, brilliant. Then they said prepare a trial balance at 30th of June. So I've done the first bit. I've drawn up all those separate tier accounts. So now I'm going to do B. B says draw up the trial balance. So capital, I'm going to write capital there. Capital has a credit, premises, fixtures, revenue would be part of the nominal accounts. Revenue had a balance of that. Drawings will be part of the financial position. The drawings would have a debit. That figure. There's my drawings. What's next? After drawings, I have purchases. Purchases would be part of nominal because it would be seen as an expense. Purchases of stock. That would be a periodic system. Okay, see later if you haven't covered the theory. Perpetual and periodic. Then you've got trade receivables. Trade receivables will go here. Financial position. Trade receivables. Trade receivables will have a debit. Where's my debit for trade receivables? There's my debit. Then I've got bank. Bank would also be part of the financial position. Bank had a balance of that balance. Then trade payables. Trade payables. Where's my trade payables? Trade payables, trade payables, receivables, payables. There's my payables. Trade payables would have a credit. Trade payables will have a credit. There's my credit. Insurance. Insurance is an expense. So insurance will go into the nominal account section. Where's my insurance? There's my insurance. Then I've got sundry expenses. After insurance, sundry expenses. The sundry expense would be a debit. So where's my sundry expense? There's my sundry expense. Then I've got wages. There's my wages. Wages will have a debit. Where's my wages? Where's my wages? Where's my wages? There's my wages. Property tax, another expense. Property tax. Debit, property tax, property tax, property tax. The amount, there's the amount. Finance costs, which is the interest. Finance costs. Finance costs, which is the interest. So I'm literally just taking those amounts from my T accounts. Long-term loan, that's a liability, financial position. Long-term loan will have a credit. Where's my loan? There's my loan. And then cash. Cash is an asset. Alright guys, so all I've done is I've taken all those accounts that I had, which were separate tier accounts. I balanced those accounts and I got those totals. If I sum up all of these amounts, does it balance? Yes, it does. So I know I'm on the right track. So that was B. B in the question said, prepare a trial balance at 30 June. So this would be the trial balance at 30 June. C says, prepare an income statement for the year ended 30 June 2016. So this is disclosure. So now you've got a trial balance. To do a statement of profit and loss and other comprehensive income, that's relatively easy to do. So income statement slash statement of comprehensive income. Okay, when looking at the statement, it's disclosure. So you start with revenue at the top here. My revenue was, okay, I'm going to draw two columns as well here, just in terms of disclosure, just to make it look nice and neat. We'll have workings and we'll have a total column. Alright, so my revenue here was given in the question. There's my revenue. Okay, we'll assume our purchases is our cost of sales. Okay, you haven't covered cost of sales yet, so I'm just going to write down cost of sales, bracket asterisk purchases. See periodic system later. Right, you guys need to revise that section. That'll be my cost of sales, so I'm going to show that as my cost of sales. And then I'm going to show a gross profit line item here. Gross profit is achieved by taking the difference between your revenue and your cost of sales. Right, remember in accounting we show negatives in brackets. So I would show that as a bracket negative, just showing it in red as a negative, and to get the gross profit, it's the revenue minus the cost of sales. Right, then you'll have other income and other expenses. You can have more detailed disclosure, so you could group certain income and expenses together, and you could call it like finance costs and admin and other expenditure and so on. I'm just going to keep it simple and just put a heading other income. Did I have any other income? No, I didn't, so 0 here. Then I'm going to show other expenses. Did I have other expenses? Yes, I did. I had quite a lot. So, purchases, insurance, sundry, wages, property, financing costs. I had all of those. So, my purchases, purchases we've looked at, so minus that one. Purchases we had earlier, we looked at that as our cost of sales. Right, hold on, what happened there? Delete. Oh, okay, no wonder. Right, so this needs to go up. Okay, there we go, that's better. Right, so insurance equals, that's the insurance. Sundry property tax, all the others. Those are all my other expenses. Then I sum up all of those expenses to get the other expenses. And that'll be a negative because you less the other expenses. So again, that'll be in brackets. And then I'll be left with a profit for the year for this particular sole proprietor. And how do I get the profit for the year? Well, I take my gross profit and I subtract my other expenses. Alright, I didn't have any other income, so I wouldn't add anything. And that's the profit for the year. Right, this is the owner's equity. Okay, the owner's entitled to it. Owner entitlement. So if the owner's entitled to it, that's going to affect his or her capital. And that's what D is asking you for. D says, complete the capital account by transferring the profit and total drawings for the year. balance the capital account. So when looking at D, we know what the profit is, so let's do D. D is capital accounts after calculating the profit. So we need the capital account. So I'm going to go back and I'm going to get our capital account. There's capital. I'm also going to need my drawings. So where's my drawings? There's my drawings. There's my drawings. I've got those two. Yeah, drawings. Great. Okay, so now the question asked me in D. D said close off the capital account in terms of the profit and the drawings. So what does the profit for the year do to the drawings and the capital? Well, it doesn't do anything to drawings because drawings is taken from the business. It is going to affect capital though. It'll increase the owner's entitlement. So that would have come from the profit and loss calculation that we would have calculated. Okay, profit and loss account, you'll have a separate account to calculate profit and loss, and the profit that you derive there would go to the capital. It would increase the owner's entitlement. Drawings has a debit balance. I want to close drawings off. So how do I close drawings off? By crediting that account and by debiting the capital. Okay, that's a closing transfer. So 30th of the 6th. General journal, that's a closing transfer. General journal. So now you've got a debit here and you've got a credit there. So what do? I sum up this and I get that as my total. So obviously there'll be a balance brought down, a balance carried down. And I would have 1st July here, the next month, because I've closed off the profit to the owner. And the amount will be this less the drawings. So that's the balance that we would have for the actual capital for this particular business after having worked out the profit. The last bit of this question is prepare the statement of financial position. So what does the statement of financial position look like? Well, I'm going to draw the statement over here. Statement of financial position. Right, so the statement of financial position has two different sections. It will have assets, and assets will be broken up into non-current and current. Then you'll have a section for current assets. Then you'll have a total assets. And that's the one section of the statement of financial position. Then you'll have another section called equity and liabilities. And here I'll have equity. And under equity you'll have capital. And then I'll have a section for liabilities. And then I'll have non-current. And then I'll have current liabilities. And then right at the end, I'm going to have a total here. Total equity and liabilities. Okay, so now I need to record all those amounts in. Okay, I had a trial balance before, so I'm going to use those figures over here. Okay, remember capital, I've closed off. They didn't say, well, let's just say statement of financial position as at 30th of June. Right, so I'm going to assume that you've done A, B, C, and D, so you'd be actually looking at capital here, which is what you have after you've closed off the profits. because you're going to be closing off the profit to the owner, which is the capital. So in the actual equity here for capital, I'm going to show after the profit calculation. So in my capital, I'm going to show equals, where's my amount? Capital, there's my amount, 57,210, because I've closed off the capital. Right, what other accounts do I still have open? Well, I still have premises. Premises is an asset, it's a long-term asset. So under my non-current assets, I'll have premises. And the premises amount to that amount, 40,000. Then I've got fixtures. Fixtures would also be a non-current asset. There's my fixtures. Drawings I've closed off. Trade receivables is a current asset. So trade receivables will be a current asset. I would reference that there. Bank is a current asset, so I'll reference bank there. Bank has a balance of that amount. Trade payables is a current liability. So current liability, there's current liabilities. Trade payables. Trade payables had an amount of that. Then I had a long-term loan. Long-term loan from ABC. That's a long-term non-current liability. Long-term loan, there's my long-term loan. The amount was 90,000. And then I've got some cash. Cash would be an asset, current asset. Right, nominal account sections. Nominal accounts, remember, show income and expenses. Statement of financial position just shows the assets and liabilities. Right, so I'm going to delete all these extra lines. And now we need to balance this. So if I'm looking at non-current assets, the total non-current assets would be this plus that. There's my total non-current assets. My current assets would be the sum of those amounts over there, which gives me that answer there. Right, so if I'm looking at total assets, I'm going to be adding this plus that. Non-current plus current gives me the total. Then I need to look at my equity. Well, equity is going to be that. So there's my equity. And then my liabilities. Okay, so non-current is this. Current is that. Okay, we only had one line item for each of them, so that's quite easy. Right, so in terms of liabilities, my total liabilities will be my non-current plus my current. Gives me that answer. So then I'm looking at my total equity and liabilities. So if I'm adding up my equity plus my liabilities, there's my equity plus my liabilities, gives me that answer. And if you've done it correctly, your total assets here should add up to your total liabilities there. And the reason for that is, you know the accounting equation is A equals OE plus L. So if my owner's equity plus my liabilities equals my assets, I know I've gotten full marks for this question. And that's assignment 1, guys, for this particular subject, accounting from the British International Distance College. Thank you for watching, and we hope to see you guys again soon. Please consider subscribing to the YouTube channel and you'll be the first to find out when new videos are uploaded. If you would like to contact us via Twitter or Instagram, or visit our website for more information.